Honorable Bihin, distinguished guests, ladies and gentlemen, for our second discussion with the topic Regulation and Standards will be moderated by Young Mulia dan Nurhuaida binti Haji Abu Bakar, manager from AMBD. Adila joined AMBD in 2013 with her main roles include measuring and reporting performance and risk indicators for all investment portfolios under Tim's management. In 2018, she was entrusted with another role in financial development to identify and assess trends, gaps and strategies in developing the local financial sector. A graduate of Nanyang Technological University, Singapore, and awarded with the Chairman's Award for Individual Excellence by the Wealth Management Institute, Adila is also a Certified Financial Risk Manager, FRM, since 2018. This session will explore how regulation and standards can support and promote the adoption of technology in the financial services sector. With the establishment of appropriate regulatory frameworks and standards, FinTech can contribute positively to the betterment of financial markets, including to the economic well-being of the consumers. Speaking as panelists are Young Mulia, Haji Muhammad Hairul Zaki bin Haji Muhyiddin, the Assistant Executive Director and Head of FinTech at the AMBD. He is responsible in fostering financial technology innovation in the financial sector. Zaki also currently chairs the AMBD Financial Institution Technology Committee. He previously served on the board of the Autoriti for Infocommunications Technology Industry of Brunei Darussalam, AITI. Our second speaker is Young Mulia Muhammad Jaswira Putra bin Haji Mumin, Senior Manager at AMBD, leading the AMBD Payment System Oversight Team, which regulates and supervises payment system and service providers in Brunei Darussalam. He contributes to the national agenda to become a digital payment nation through various means such as participation in various industry bodies, infrastructure building projects, and national policy setting bodies as well. And our third speaker for this morning, Young Mulia Awang Muhammad Mas Nazirul Hashir bin Pengiran Haji Masuni, serving as an Associate of Capital Market Function in AMBD since 2015. His core works mainly revolve around formulating and reviewing policies, legislation and regulation on capital market, overseeing new trends and development, and fostering international relations with regional and global securities regulators. Again, joining us on cyberspace is Caitlin Thin, Assistant Director of the FinTech and Innovation Group with the Monetary Authority of Singapore. Caitlin is Assistant Director. She is responsible for driving industry-wide initiatives that help shape Singapore as a smart financial center and build a vibrant FinTech ecosystem in Singapore. Besides extensively engaging ecosystem partners of various jurisdictions on innovation and financial technology, Caitlin is also actively involved in industry-wide initiatives on open APIs. We now pass the floor to our moderator.
Thank you for the kind introduction. Bismillahirrahmanirrahim. Honorable Minister and Your Excellency, distinguished guests, ladies and gentlemen at the Empire Brunei, and also to those who are watching us virtually, Assalamu alaikum warahmatullahi wabarakatuh, and good morning or evening or afternoon to all of you. So my name is Adila and I'm pleased to moderate the second panel session for today. I'm very mindful of the time, so I think I'll just go straight to the content right now. In terms of regulations, they are important discussion as we can draw from the pandemic outbreak, whereby FinTech plays a huge role in mitigating pandemic risk associated with exchanging cash as well in supporting MSMEs. On that note, we don't think that development will stop here. In fact, it will continue to accelerate further and also comes with a new risk that won't necessarily fit into the regulatory frameworks right now. So let me go straight to the first panelist today, Mr. Zaki Muhyiddin, to share more on the FinTech regulatory sandbox as mentioned briefly in the opening remarks today. So Mr. Zaki, the floor is yours.
Thank you, Adila. Assalamualaikum warahmatullahi wabarakatuh, and good morning to distinguished guests and panelists in the hall. And good morning, good afternoon, and good evening to those who's tuning in from the other parts of the world. First of all, it is an honor for me to be part of this World FinTech Festival event. My name is Zaki Muhyiddin, Assistant Executive Director and Head of FinTech. I'll be sharing with you on the topic related to FinTech Regulatory Sandbox. Next, just a standard disclaimer before I proceed. Next. So in the interest of time, I'll just skip on the introduction. I'll go straight to my main topic, which is the FinTech Regulatory Sandbox. Okay. I will share you one of our policy tool or framework to make our regulatory environment more conducive for FinTech, which is the FinTech Regulatory Sandbox. In balancing risk and keeping up with the pace of innovation, Ambd has introduced the FinTech Regulatory Sandbox in 2017. FinTech Regulatory Sandbox is a policy framework that enables qualified companies and businesses to experiment with innovative FinTech solutions in a relaxed regulatory environment for a limited period of time and boundaries or thresholds. Ambd recognizes that risks and failures are fundamental elements of innovation, and so a regulatory sandbox should contain all the safeguards necessary to contain the consequences of these elements, with the overall safety and soundness of the financial system being a prime consideration. Why do we even need such sandbox? Well, the pace of innovation in the financial services industry has been accelerating because of the advances in financial technology. In China, for example, nowadays it is more convenient for you to pay at shops and restaurants using mobile wallets such as WeChat or Alipay as compared to cash. FinTech is transforming financial services that can bring benefits to businesses and consumers. But this phenomenon is not without risk. And financial services sector is known to be one of the most highly regulated sector in the world. You can't just provide any financial services without acquiring proper approval from the regulators. There are regulations that providers must comply to. But introducing regulations prematurely may stifle innovation and potentially derail the adoption of useful technology. So the regulatory sandbox is one approach to enable innovation while managing significant risks. Next. Who are the currently approved participants in the Ambd FinTech Regulatory Sandbox? Currently, we have 4 approved participants, and they have the presence at the side of the hall here. So if you haven't had the chance to visit the booth, I highly encourage attendees to visit and get to know more about the innovative solutions that they are testing. First is BruPay, who is currently testing an electronic wallet system that allows users to make payments to merchants using the BruPay smartphone app. Second is Beat, who is currently testing Alipay merchant acquiring, which allow tourists and expats from China to purchase products in Brunei using the Alipay smartphone app. Third is MoneyMatch, who is testing digital remittance and cross-border payments using blockchain technology and artificial intelligence. And our latest sandbox participant is Jana Capital, who is testing Sharia-based peer-to-peer crowdfunding platform for MSMEs to finance the purchase of assets. Next. For my final slide, as announced by Yang Berhad Pihin earlier, today Ambd issued the amended FinTech Regulatory Sandbox Guidelines, or what we like to call the Sandbox 2.0. After 3 years of operating the FinTech Regulatory Sandbox, we have found few areas that we can improve following feedback from Sandbox participants, as well as internal business functions. Therefore, since early this year, we have been working on the Sandbox 2.0. The outcome is now we have amended our guidelines and a more streamlined application process. Our main objective is to reduce the turnaround time for the Sandbox application. I will speak more about this during our panel discussion later. Thank you.
Thank you very much, Zaki, for the informative presentation. I think that in the presentation, many of us noticed that there are few payment services operators already in the sandbox. And that's very interesting because it actually mirrors on the global findings on the increase in the use and offerings of digital payment services out there. So with that, I'll pause first and pass the floor to Yang Mulia Mumin to share more what's next beyond the sandbox for these payment services operators in Brunei Darussalam.
Assalamualaikum warahmatullahi wabarakatuh, everyone. Good morning, and thank you for giving me the opportunity to share with you what Ambd has been up to in the payment space. So let's fast forward to the contents table, which should give you a brief overview of the materials that I'll be covering today. Now, next slide. Really, what I want to do is zoom out a little bit and consider the term FinTech. That's financial technology. Let's flip that. Let's talk about technology first. It's it's in itself, it doesn't create any value. What we really need to do is be able to apply it. That's where really the value will come from. So in looking for an exemplification of this point, we really should refer to this titah, this excerpt from His Majesty's titah back in 2018. Well, he identifies technology really as something that is in its application plays a vital role in helping us achieve our objectives. That is, in this specific sense, the achievement or the move towards a digital economy. Let's zoom in. Let's go to financial now. Financial in FinTech. Next slide. So how is the technology being applied today? Well, the technology underpinning all of the payment activities that we see taking place nowadays really helps to create new types of products and services. It's improving access, as we see, because the mobile phone is becoming ubiquitous now. You'd hardly find anybody. In fact, I'd go so far as to point out that everyone in this room has access to a mobile phone, and that in turn allows us to access various types of financial services, payments being one of them. It allows various use cases, various applications of payment to be made, for example, through the specific, again, use case of online services like e-commerce, and we are seeing the convergence across various different types of payment activities. To be clear, what this means for us is that there is a more varied market coming into existence. We see more non-bank players being able to now provide financial services where previously you would really only typically go to a bank to engage for these kind of services. On the other side of that coin is these non-bank players are able to acquire customers at much lower price points. And for you and me on the street, we're able to enjoy better customer services, better customer experiences, and more easily access all these different types of financial services as well. That brings me on to what AMBD has really been up to in this space. Down 2 slides. Again, please. So we've gone back all the way to 2015 by making very clear where we stand on digital payments, or back then the nomenclature really was electronic payments, right? It's something that has clear benefits to the country, to the person on the street again, and we've made very clear where we stand on this. We need to have more. We also recognize that there will be potential displacements of the status quo. Paper instruments, cash, checks, these will see a downtrend with digital payments displacing what was previously there. We've provided a finer focus on what the high-level objectives of the FSBP are in the digital payments roadmap, where we make very clear what kind of policy actions need to be created, and what kind of players, what kind of infrastructures need to be brought into the market. And I'm glad to report as well that we've gotten very good alignment with other stakeholders in the country, and the added gravitas of the Digital Economy Master Plan identifying national digital payments as a flagship project under the master plan as well. Next slide. I'll cover very briefly what we've done in this space vis-a-vis regulation. So we came out with a notice quite recently which really aims to empower AMBD to better allow us to regulate the payment space and its players. And what we do in addressing that particular concern is ensure that we have the appropriate powers to allow us to roll out rules covering the safeguarding of customer funds, to cover rules regarding the safeguarding of, again, AML, anti-money laundering, terrorism financing, the countering thereof, and the rules of how to address all these concerns. And finally, because we need to provide as consistent a playing field for all these players, we want to be able to introduce as well as strengthen relevant standards pertaining to digital payment and all the forms it comes in. Next slide. Going into the notice itself, what it really aims to do is provide clarity, right? This is a completely new piece of regulation that we've come out with, and because of that, it aims to clarify to anyone who wants to enter into the space what activities come under our purview. So we have a definition for payment system in that notice, which should really provide clarity on what counts, what is considered a payment system. We've even gone so far as to provide a couple of examples from account issuing services to e-money issuance, as well as merchant acquiring services. Now, that's not to say these are the only examples, but it does serve to provide a benchmark of what types of services we already see taking place in the market as well. Next slide. So very quickly, we already have benchmarks established for what needs to be in place for you to qualify to apply under the notice. So it ranges from being a specific type of company to having a base capital of 100,000. Fit and proper requirements are always important. Permanent place of business. And this leads very nicely into the next slide, which really covers what kind of ongoing regulatory requirements a company needs to have in place, it needs to adhere to when running a payment system or offering a payment product or service. Capital buffer, safeguarding of funds in the form of a banker's guarantee, regulatory compliance, limits for electronic wallets. Technology risk is always the boogeyman when we talk about the shift towards a digital economy. And on-site inspection, these are all really standard things that we include in all of our regulations. And that really points towards how we're trying to bring in payment service providers under our regulatory umbrella by providing the same kind of standards that you would typically be subject to when offering other types of financial services. Next slide. So we do recognize regulatory reporting will become a burden, and we do strive to provide as much clarity on this point as we can. So in terms of monthly reporting, these are the typical types of data points that you need to submit, and ad hoc reporting really is done on a needs basis, and we tend to communicate very well on this through consultation and reference to the industry before we do embark on any type of that kind of reporting. So next slide. So we've covered technology and its application as well, but let me try and bring things home and see what else we're trying to do in this space. So really, what we're trying to do at AMBD is to effect digital transformation in the payments market. By doing so, we'll hope to have provided a clear value chain along the payments ecosystem, where we hope, again, to encourage very specific types of behaviors, moving away from the analog modes towards the digital channels. And what that will also entail is a lot of collaboration in the market, because a market small as ours really does give us an opportunity to create those network effects that will bring the success that we need to see. And on the consumer side, richer customer experience and a broad and varied palette of different methods available to the customers. So I'll bring it to an end there. To the final slide, please, where I do encourage anybody who wants to enter the space to engage with us. This is where you can reach out and talk to us. And thank you very much.
Thank you, Jaswira, for the elaboration. Can I remind the audience again to post some questions on slido.com by scanning the QR codes in front of you? So coming to back to the discussion, I think that beyond payment services, the pandemic also called for more resourceful financial system, and it also presented opportunities for other fintech solutions like crowdfunding to grow. And on the other side of the coin, regulators have also made their stances clear, including AMBD, by issuing notice and guideline on equity and P2P crowdfunding. So on that note, can I invite Mas Nazirul Masuni from AMBD as well to share more about how crowdfunding platform operators are being regulated in Brunei Darussalam?
Bismillahirrahmanirrahim. Thank you, Abdullah. Honorable guests of honor, your honorable opinion, distinguished guests, participants attending this FinTech festival here and virtually, and ladies and gentlemen. First and foremost, it is indeed a great privilege to be invited to this prestigious event and to be lined up as a panelist with my learned colleagues from AMBD and MS. So without further ado, let me begin my presentation. Next, please. I'm going to skip a few slides on the introduction in the interest of time. Next slide, please. Could you please go back a bit? A few slides behind. Next slide, please. Okay. Crowdfunding can be seen as an innovative way to raise capital or funding for SMEs or startups, which eventually having a goal to promote the economic growth. So in terms of the global crowdfunding industry, it has experienced at a rapid pace and has impacted the lives of people. Back in 2012, the global crowdfunding industry market value was recorded only at $2.7 billion US. Last year, it was valued at $13.9 billion US and is forecasted to triple by 2026. Next slide, please. In terms of the types of crowdfunding, it can be broadly categorized into 4 types, namely donation-based crowdfunding, which is basically people donate money for social purposes or philanthropic purposes. And the second one is basically reward-based crowdfunding, where people give money to fundraiser in exchange for a specific reward in the form of product or services. These 2 types of crowdfunding are commonly termed as community crowdfunding because these 2 crowdfunding do not generate any financial return, whereas the other 2, which is the peer-to-peer lending, whereby the people lend money to the fundraiser. In return, they will receive interest payment as well as the repayment of the capital. And the next one is the equity-based crowdfunding, where people purchase shares issued by the company. So the last 2 types of crowdfunding are commonly termed as financial return crowdfunding. So because these two types of crowdfunding basically generates financial return. So normally these 2 types fall within the purview of securities regulator, and in the context of Brunei, it falls within the purview of Ambd. So next slide, please. We'll skip this one. Okay, I'll just go back a bit. Okay. I'll just quickly run through the benefits and risks associated with crowdfunding. Undoubtedly, there are certain benefits associated with crowdfunding. First of all, is basically it lowers the cost of capital. It helps to diversify the portfolios of the investors. It definitely relatively provide a higher return compared to other asset class, and it's convenient because it relies on the use of technology and internet. However, we have to be mindful of the risks associated with crowdfunding, such as the risk of default and platform failure. It was recorded that 22.4% is the average success rate of crowdfunding platform as at 2020. So, crowdfunding also prone to cybersecurity issues such as hack. So, back in 2014, Kickstarter was hacked, which resulted loss of users' data. So there are also concerns on anti-money laundering and also combating terrorism financing. And most importantly, the main risk would be a high risk of losing the capital. Next slide, please. We'll skip this one. Okay, we'll deep dive into the legal framework of equity crowdfunding and peer-to-peer financing in Brunei. Next slide. So, Ambd had issued 2 notices. The first one is basically notice on equity-based crowdfunding platform operators back in August 2017, whereas the second one is the notice on peer-to-peer financing platform operators, which was issued back in April 2019. So, just to give a bit context to these notices, in developing the framework, we look into the practices and the approaches of other jurisdictions such as UK, Dubai, Singapore, Malaysia, and other countries. But we try to localize and suit the context of Brunei as well. So one thing that we have to be mindful when we develop the framework is we have to proportionate the risk of investor as well as basically the regulation imposed must be proportionate to the risk of investors. So these 2 notices covers mainly 3 main aspects, which are the platform operators, issuers, and investors. So we're going to discuss each of these aspects. Okay, next slide, please. Okay, we'll skip this one. Okay, it's given. So, in terms of the requirement of platform operators, any platform operators, any person who wishes to operate platform operators in Brunei Darussalam must obtain the capital market services license. So to do that, they have to be incorporated as a company or registered as a company under the Companies Act. So apart from that, they are also subject to certain other requirements such as the reporting and disclosure requirement, minimum financial requirement, and outsourcing arrangement and advertisement restriction. In terms of minimum financial requirement, I believe Brunei Darussalam is one of the lowest minimum financial requirement imposed among ASEAN region. So in the context of transfer of fund, we adopted all or nothing, whereby you must fulfill all the, you must reach the targeted amount sought before it can be transferred to the company. Next slide, please. So not all types of companies can be hosted on the platform. So for now, the private companies can be hosted on the platform. As in terms of the type of securities, only common shares will be issued for equity-based crowdfunding, whereas debentures for the P2P financing. So as we go along, we could see the limit. We impose certain limits to the fundraise. So basically, the limit that we have imposed to the issuer is 500,000 that's the typo, within 12 months period, or 1 million in total. So in terms of risk scoring, this risk scoring requirement only applies to peer-to-peer financing, where the securities must be rated by the platform operators. The issuer are also subject to certain disclosure requirements. They have to submit relevant information such as the business plan, key characteristic of the company, financial information, and so on. Okay. Next slide, please. So, as for the investors, the max number of investors that we allow is basically 50 investors per issuer. So, with a total amount of no more than 300,000 within a 12-month period. This investment limit is imposed on the retail investors. Whereas for the sophisticated investors, there is no investment limit. There is no investment limit imposed on them. Okay. Next slide. Okay, I'll end my presentation with the last slide, which is we shall be sharing some inspiring stories from the ASEAN region. So, if you could see how crowdfunding can impact the lives and transform the growth of SMEs and support economic growth of the countries. Unfortunately, we don't have a crowdfunding platform operating in Brunei Darussalam. Or perhaps by sharing this regional inspiring story, we can inspire other people out there to operate in Brunei Darussalam. With that, I'll end my presentation. Thank you.
Thank you, Mas Nazirul. I also look forward to having more crowdfunding platforms in Darusalam. So we've heard presentations on regulatory sandbox, payment services, as well as on crowdfunding. But what we have not discussed is other parts that actually gel the FinTech ecosystem together, such as the open application programming interfaces, or open APIs. So with that, I'm pleased to introduce you the fourth panelist for today, all the way from Singapore, Ms. Caitlin Thin, from Monetary Authority of Singapore, to share more about open APIs, as well as how MAS actually encourages open APIs in the industry. Caitlin, I hope you're still there. The floor is all yours.
Hi, thanks a lot. Good morning to distinguished guests and friends from Brunei Darussalam and around the world. So I'm very glad to be invited by Ambd and CIBFM for having me here to share about open APIs and how in Singapore we leverage on open APIs to promote a vibrant FinTech and innovation ecosystem. So over to the next slide. Okay, so APIs basically allows one application to interact with another, and this is mainly usually for information exchange. And over the years, we have seen a growing interest in APIs, and we also see a lot of financial institutions making use of APIs to give access to their data within the system. And this is not surprising, given that the open APIs usually create a lot of benefits for stakeholders within the financial services industry, as well as beyond. So if you look at the open API economy, usually you will see that it creates a vibrant marketplace where there's a lot of collaboration, people-product integrations, and hence better services that can be offered. And usually, because of all these innovations that it enables, it creates a better and vibrant ecosystem as well. And of course, to the business leaders, this is good news because not only does it help them to stay ahead of the game, it also allows them to basically better manage their risk and at the same time tap onto and react faster to market opportunities. So next slide. So within Singapore itself, we do not mandate the adoption of APIs. Instead, we take a different collaborative approach by enabling financial institutions to leverage on technology and partnerships to co-create and develop innovative solutions. So we do that by encouraging them to develop and share their APIs openly so that they can then work with the industry and develop better solutions that can serve the customers better and create more value to the ecosystem. So since 2016, MAS has taken up a few initiatives that is more targeted at opening up the APIs. So one of them is the Finance as a Service API Playbook. So this is basically a guidebook that identifies common and useful APIs for the industry as in terms of guidance on how they can set their security standards, what kind of APIs can they adopt, what kind of governance models can they adopt should they start using APIs. And that's one of the initiatives MAS took. Besides that, we also have the Financial Industry API Register. So this is basically a register of open APIs that are made available by key financial institutions within the local industry. So there are different types of APIs ranging from transactional APIs to informational APIs. And this basically is a registry that lets people see what kind of APIs are available on the market, where they can tap onto them to create even more innovative solutions. The other initiative that MAS led was the API Exchange platform. So if I go on to the next slide. So as a bit of background, MAS is one of the public interest founding members of the ASEAN Financial Innovation Network, or AFIN for short. So AFIN was set up with the objectives of basically promoting financial innovation and inclusion around the world. And we together with MAS, we had ASEAN Bankers Association and the IFC, a member of the World Bank Group, to set this non-profit entity up. And APIX is the basically the flagship product of AFIN. So on APIX itself, it is a cross-border open architected platform where financial institutions and FinTechs can discover each other. Today, I'm very proud to say that we have over 300 plus FinTechs on the platform who are actively innovating and collaborating with over 50 plus financial institutions. And these are FinTechs and financial institutions from all over the world, not just within Asia itself. So all the people come together to discover each other, find out what kind of services and technology they offer and how they can co-create solutions. We also provide a secure sandbox. So this is a digital sandbox where you can do your own prototyping, create minimal viable products, and then see how all these solutions can then be brought into the commercial realm. We also allow financial institutions to fast-track their problem solving. So let's say if you're looking to find ways to set up a digital bank, you can set up a hackathon on APIX, and that allows you to seek for global solutions to quickly address your problem statement. We also have a global ecosystem that allows you to connect and engage with innovators from all around the world to basically talk about innovation topics and to see what kind of ideas are coming up and whether your idea is something that's worth developing into a product. Going on to the next slide. So this is the last, or rather the most recent initiative that MAS adopted together with the Smart Nation Digital Office that Chee talked about. So I think earlier, as part of today's session, there was a mention about Singapore Financial Data Exchange. So this is something that MAS took together with the industry. So it is the world's first public digital infrastructure that basically leverages on the National Digital ID identity, SingPass, which Chee talked about. And then it also leverages on a centrally managed online consent system to allow individuals to consolidate their information that is being held across the private sector, which are the financial institutions, as well as the government agencies. So before SG FinTechs came about, basically in the olden way, service providers who want to provide services would need to go to each of the data sources and then set up a bilateral relationship. But with SG FinTechs, basically we allow you to do away with the bilateral connections. Service providers can now leverage on SG FinTechs as a central gateway with common data and API standards to connect and then obtain the data from multiple sources with the use of national digital identity as well as consent framework. And ST FinTech addresses one of the key pain points of financial planning that most of us would face when we try to consolidate our financial data. So in the past, we might have to get our data from and do a manual collation from different banks or different sources that has my financial data. But with ST FinTech, it basically allows you to have a more efficient financial planning process, because now you can conveniently and securely pull all your financial data onto one financial planning platform. And this is underpinned by customer consent, national digital identity, and a lot of safeguards that protects your data even as the data is being transmitted around. So these are some of the initiatives that NES has undertaken to basically encourage the ecosystem to be more vibrant, and so that innovation can happen more easily and more effectively. So with that, I'll end the presentation here. Thank you.
Thank you very much, Caitlin. Let me go straight to the panel question and answer now. So my first question is, Zaki, you talked about FinTech regulatory sandbox, the 2.0, as well as the upgrades that have been made. I guess for the prospective FinTech applicants out there, what are the prerequisites and criteria that they need to fulfill to apply to the sandbox?
Okay, thank you, Adila. For the prerequisite, applicants should be able to show that they have done their due diligence before applying to the sandbox. This includes they have tested their solution in a test environment, as well as having the knowledge and relevant legal and regulatory requirements for deploying that proposed solution. In terms of the criteria of our application to the Sandbox 2.0, first, the proposed financial service is using technology in innovative way, and there are no other comparable products out there in the market currently. Second, the proposed solution will bring benefits to consumers and industry. Third, they have the clear test scenarios and expected outcomes. Fourth, appropriate parameters for the protection of consumers, as well as the safety and soundness of the financial system. Next one is the proper risk assessment have been done, where significant risks have been assessed and mitigated. And lastly, clearly defined exit and transition strategy. And we encourage interested applicants to engage Ambd through the application office, FinTech office, if they require any further information or clarifications.
All right, thank you. Let me go to the audience questions first. To Jusria Mumin, what challenges do you see now and in the future on the payment ecosystem in Brunei?
Simple. There's a reason that there's a book that former chief economist of the IMF came out with, is titled The Curse of Cash. It's because it has so many problems associated with it, yet it is a necessary evil in the world we live in today. So we have this term that we associate with cash, that it's sticky. It's very difficult to do away with cash. Unfortunately, it's something that we have to face if we are to displace it with digital payments in general. So that's really the answer, dealing with the curse of cash and how sticky it is.
Okay, I think there's another question as well. What's the regulation surrounding e-wallet? I think that in your presentation, part of the regulatory requirements that they need to comply to are e-wallet limits as well as tech risk requirements. Can you elaborate more on that?
Sure. Again, it's this idea that we're displacing cash, and what cash typically is associated with is the wallet. So you have to provide as consistent an experience as, it's associated with your physical wallet, with whatever experience is going to be associated with your e-wallet. And what that means is you have to be able to tell your customers, if you lose your wallet, you'll lose your cash, but if you use an e-wallet, you might not necessarily lose your cash because there are these controls in place. And that's really where the idea of limits comes in. Risks are going to be there associated with any type of digitalized financial service out there, but the limits come into place to mitigate all these different risks. And I think we've covered this point a couple of times in the past sessions as well. When you go into the digital space, the benefits are abundant, but then again, so are the risks. And that really is where technology risk mitigational measures come in. We have certain standards out in the market right now, but these really only pertain to specific types of financial institutions, currently not payment service providers, though we are working on that. And really what it's about is getting all the non-bank payment service providers up to a minimum standard in order, again, to address all these risks arising out of digitalizing the wallet. So I'm talking about security requirements. I'm talking about multi-factor authentication when you effect a payment. And it's all these tiny things that come together to provide a consistent, safe, secure customer experience.
All right, thank you. I like that. I like the fact that you actually stress on risk. In fact, that's my next question actually for Caitlin. So when we talk about open APIs, especially in the context of SG FinTech that was recently launched on Monday, so that will enable the sharing of data in the financial industry. But when we talk about open APIs, one of the risks relevant to this is privacy. So in terms of using SG FinTech, how is one's privacy actually protected? And does SG FinTech actually store any data of the users actually?
Thanks for the question. So I think when we designed SG FinTech itself, customer privacy and making sure that we protect the data was one of our key principles. So there are a lot of stringent security measures that we took in place to safeguard the individual's personal data that passes through SG FinTech. So for instance, the user, his identity has to be verified by the National Digital Identity, which is called SIM-Pass, before any financial data can be passed through. So that was the very first layer. And then after the identity is verified, we also make sure that the user gives explicit consent for the data to be retrieved. Only with this consent, then we pass the data through. And whatever data that is being passed through is also encrypted, when transmitted through SG FinTech. And only the financial planning applications or the website or the intended recipients of this data is then authorized to retrieve the data and then to decrypt this data. And of course, SG FinTech doesn't read or store the user's personal financial data. So all these are the different measures that basically help to ensure that there's data privacy and confidentiality that is being protected and safeguarded.
Okay, great. I think, Caitlin, again, on the SG FinTech, I see that it's primarily aimed for individuals, but I also infer from the opening interest during SFF is that SMEs also are an important sector in Singapore. So in terms of utilizing SG FinTech, can MSMEs actually utilize the same exchange, or is it just primarily aimed for individuals for now?
So the current target audience is basically mainly on the consumers or the individuals. They are the consumers of the participating financial institutions. But of course, nonetheless, the government of Singapore is always committed to catalyzing the growth of the local financial industry. So we're always exploring how can we explore the ecosystem to bring about more benefit to the financial industry beyond just the existing participants of the financial data exchange itself. Yeah.
Okay, I think when I touch on MSMEs, I think I just opened a Pandora's box. In fact, there's actually a question on MSMEs in the audience questions. So on the topic of MSMEs, I have to ask my local colleagues here, how do you view FinTech solutions in supporting MSMEs? Is there any wish list that you see, that you want actually in Brunei Darussalam in supporting MSMEs? And I think for Mas Nazirul, do you think crowdfunding is a solution to enhancing MSMEs' access to finance in Brunei Darussalam?
Okay, thank you, Dila, for the question. Perhaps I'll give a bit of a perspective in the context of ASEAN on how SME stands. So basically, SMEs form the backbone of the economic activity in ASEAN, accounting more than 90% of businesses. So if you look at the annual census of enterprises issued back in 2019 in Brunei, so 97.3% of enterprises in Brunei Darussalam are MSMEs. So it was also reported that based on the SME funding gap in ASEAN, which was conducted back in 2014, Brunei funding gap was estimated around 7.2 USD billion. So while bank loans will remain essential to address the SME financing needs, but we have to acknowledge that there are SMEs requires other types of alternative instrument. So this kind of instruments ranges from factoring, private equity, venture capital, angel funding, public equity, or even blockchain financing through ICOs. In other words, I would say yes, crowdfunding can be seen as an alternative way to help these SMEs, but that's not the only alternative instrument to do that.
Great. And then for Jasira and Zaki, so what's your wish list in terms of fintech solutions that can support MSMEs?
Right. I will offer the most central bank key of answers, and that's standardization. So we already know how difficult it's going to be to displace physical cash and paper checks. And really it will come down to how consistent the experience is when using digital payments. It's the easiest thing in the world to pull out cash from your wallet and then hand it over to a merchant or a kadai or a store. The same might not be true for paying with a card, with a phone, with whatever other device that affects digital payment. So my wish list there would be to effect standardization to ensure consistency of experience.
Great. How about Zaki?
Thank you, Dila. For myself, I think on behalf of the Sandbox, what we like to see in our Sandbox is more innovative fintech solutions that can help MSMEs, such as micro financing or alternative lending, or even automated financial management. Surprisingly, these solutions can all be potentially provided by a virtual bank. So my wish list probably in the future will be looking at virtual bank or digital bank.
Okay, I think I'm very mindful of the time that we have now, so I'll just have one closing question that you can give me just one word answer to. So my question is, in the short to medium term, what's the most important area that would need regulators' attention? You can start with Zaki. Just one word, please.
Sandbox 2.0.
Jasira?
Digital payment hub.
From my end, perhaps cross-border offering.
And Caitlin, how about yourself?
I guess sustainability is the key word.
Okay, so there's a lot of there's a wide-ranging topics that we need to take care of in the short to medium term as regulators, and we can all agree that there's a lot of work cut out for us soon. And of course, there will be more as the pace of innovation continues to outstrip the ability of regulators to catch up. So with that, unfortunately, we have reached the end of the panel session, and I'd like to thank the panelists today for sparing your time, as well as Caitlin from MAS. So thank you, everybody, and thank you for tuning into the session, as well as I hope that you have an enriching experience at the FinTech Festival. Thank you, and Assalamu alaikum.